Hello, my name is Elias, and today I'll be walking through Alaska Airlines' acquisition of Hawaiian Airlines back in December of 2023. I think this deal was very interesting because of some of the choices that were made, as well as how the deal was structured, and a lot can be learned from it. So before I dive in, I think it's always good to get a little bit of a background on the two airlines themselves. Hawaiian Airlines was the 10th largest in the United States, founded in 1929 in Honolulu, Hawaii. And they covered connections between the islands as well as from the West Coast to Hawaii, as well as from Hawaii to places like Japan, China, and Australia. Alaska Airlines, on the other hand, was the fifth largest in the United States. They were founded in 1932 in Anchorage, Alaska, and covered a lot of the Pacific Northwest. A little as to their standings prior to the acquisition, Alaska was in excellent shape. They had a operating revenue of $10.4 billion in 2023, with a very healthy unrestricted cash balance of $2.5 billion, as well as a standard norm enterprise value to EBITDA multiple of 5.76. Nothing out of the norm. Hawaiian Airlines, on the other hand, was in pretty poor condition. So in 2023, their operating revenue was $2.7 billion. But then again, their total debt was at 2 billion 30 million, which gives them a very poor debt to revenue uh, ratio, and they had a negative EBITDA of negative $169 million. And a little more as to why Hawaiian was in this standing. If you recall back to 2022, you may remember Maui underwent a lot of wildfires, which really decimated their tourism industry, which of course Hawaiian relied on heavily to draw from for their customer base. A little broad overview of the deal itself. So, if you look on the Hawaiian Airlines holding reports, they're quoted as saying Alaska Airlines will acquire Hawaiian for $18 per share in cash for a transaction value of approximately 1.9 billion, inclusive of the $900 million of Hawaiian's net debt. Um, so a little more on the goals of the deal. So what Alaska Airlines was really looking for was definitely access to their routes as well. So access to places like Japan, Australia, as well as from the islands to the West Coast. Market dominance, they projected that they could have 50% of all the flights to and from Hawaii, um, given the structuring of this acquisition and their plan moving forward. They also estimated that they could add $235 million in value to their annual run rate through their synergies. And they also committed a very high single digit earnings per share acceleration or accretion in their first 2 years. Something to keep in mind. A little more on the financial analysis of the deal. So, again, deal value of $1.9 billion. Um, So it would be $1 billion equity paid to the shareholders of Hawaiian, again, for that $18 per share, which was actually a 270% premium, a very large premium, um, given that their shares were trading at $4.86 per share prior to the announcing of the deal. Now, Hawaiian had a enterprise value to revenue ratio. We can't use EV to EBITDA because, of course, they had a negative EBITDA, but of 0.7, which was a third of the typical airline M&A. Um, Something to keep in mind. I thought that was very interesting. But also that a one-time integration cost of 400 to $500 million. This would be things like paying legal fees, um, and so on and so forth. Um, Hawaiian also refinanced some of their debt, $1.5 billion of their debt. Of course, under Alaskan, they'd have a lot easier time getting lower rates on their debt, given that Alaskan was in a much stronger standing. They could get, um, investors had much more confidence, so they'd be willing to give them money on a lower interest, which saved them $35 million every single year. Okay, and a little more on how Alaska Airlines planned to finance the acquisition. Recall there's the $1.9 billion price. So what were their options? They really had four. They could utilize their cash on hand. Of course, they had that massive stockpile of cash, that $2.5 billion. But the fact that the deal would have cost them $1.9 billion would really spook a lot of the investors as they require them to keep at least 15% of their minimum liquidity as a buffer, just in case worse comes to worse. Um, they could issue new stock, which is common practice in raising money, but they didn't want to dilute their shareholders' positions. Also, issuing new stock, $1.9 billion of new stock can signal weakness. It's basically like saying, I want to raise this money, but I don't want to put up any of my money. I'm just going to, because maybe I'm not that confident in the deal itself, which is a bad look. They didn't go with that. They could go through a traditional bank loan, but taking on more debt it requires collateral, but Alaska had already pledged a significant portion of its assets against existing debt, and they're also taking on Hawaiian's new debt. Remember that $900 million in debt that they were assuming, so that wasn't an option. They ended up going with the fourth route, which was securitizing their loyalty programs, which I thought was a very interesting choice. So um, they bundled their future cash flows from things like their loyalty programs, and used them as collateral for corporate bonds, which they issued. Um, Securitization, you may recognize that phrase from something like from 2008, for example, when they would securitize home loans and sell portions of those. It's the same idea, except a lot more predictable than mortgages. And how did the markets react? So this is, of course, a big part. So December 3rd, again, is when the deal was announced. And you can see that on December 4th, I guess, that the market probably opened the day after. A massive hit to Alaskan Airlines. I mean, that's expected. Usually in acquisition cases, the company doing the acquiring, they take a hit because, of course, they just took on $900 million of new debt. So they saw their shares down from $39 to 33 at open, down 15%. Hawaiian, on the other hand, saw a massive increase from $4.86 to $14.22, which is a 193% increase. I think it's really interesting. Something that I learned is actually the spread between the $14.22 and the $18. Remember, that was the payout to shareholders, um, the price of acquiring Hawaiian. That reflects the market's estimate of the risk that the Department of Justice might block the acquisition. So I guess that's like that 25% spread is the chance that the market is giving that the Department of Justice will say no for any reason. They might argue that it creates a monopoly or that any rules under unfair competition. I just thought that was pretty interesting. Yeah, so a very good react. Of course, to get to the $18 price offer, it took them until mid-September 2024 when the deal was closed. All right. Conclusion. As for the bargain or rescue, which was way back in my first slide, it's really too early to tell. The integration is ahead of schedule, so synergies are tracking ahead of the original $235 million projection. Again, the annual run rate added value, which is amazing. The combination network now carries over $55 million or passengers annually. The short-term pain is very real, but that's what was expected. Hawaiian's ongoing losses dragged Alaska's net income from $395 million down to $100 million in 2025, which equates to roughly a $518,000 loss. per day on the Hawaiian side. Real verdict comes in 2027 because Alaska set a benchmark of $1 billion in incremental pre-tax profit by then. And they say they're on track. If they hit it, then it's one of the smartest distressed assets acquisition in airline history, of which there have been a few. Um, Delta and Endeavor is an example. United and Continental, for example. Another major problem that you might have been thinking of this whole time is the recent happenings with the Strait of Hormuz and the rising oil prices. Alaska is particularly susceptible to rising oil prices. Um, they spend 25 to 30% of their annual budget on jet fuel. So this is this is pretty bad for them. Of course, they just took on all this debt. They can't really, their margins are very thin. So it'll be very interesting to see where they go from here. I wish the best, but I myself am not too confident in Alaska Airlines, but we shall see. And this is my work cited. Uh, yeah, thank you so much for listening. It was a pleasure. Take care.